All right, we live.
Are we
Let's
live?
go.
Check, check. Mic check.
Mic check 1 2 1 2, ladies and
This
gentlemen.
thing on?
Welcome to the Amazon live stream. We got earnings, the most important retailer in the world. 22% of the consumer discretionary index, 5% of the NASDAQ 100. Strazza, did you realize it was that big?
It is the most important retailer in the world, hands down. No one comes close. It's one of the most important stocks. It's one of the most important companies. It's one of the most important businesses in the world and to the global economy, which is why we're making a big deal out of this earnings event.
And not to mention, some people like to listen to their earnings and, try to figure it out. And in my experience, it's really confusing. So we are incredibly grateful to have Jeff Mackey with us today. Jeff Mackey, as he likes to say, has been studying retail businesses and analyzing them, speak of the devil, for longer than most people have been alive. Jeff, welcome, my friend.
Thank you, man. It's good to be here. Can everyone hear me okay? Am I all tuned in and sped up and internet friendly?
Dude, you sound great. You look great. Dude,
thank you. I've been riding my Peloton, man.
Mackey's on the Perlman program. Strazza, you know that? We're all on the Perlman program.
That could sound like a joke to a lot of people at this point. Are you actually riding a Peloton? Is that how you stay fit?
I actually am. I'm not gonna lie. It was incredibly lame until about 12 hours ago, maybe 5 hours ago, and then all of a sudden I feel kind of like a cool kid again. But either way, I'm like 3,500 rides into it after 3 years. So
wow,
yeah, I kind of do that.
Well, you're Spencer, can you throw up slide 5 there so people can see? We're gonna get into the Amazon now, but guys, while we're getting warmed up, you got to see this. Jeff Mackey, as somebody who looks at as many charts as I do. No, not that one. Throw up the Peloton one up at the top. I create a lot of charts. I look at a lot of charts. I'm friends with a lot of people who also create and look at a lot of charts. I got to tell you, both Strazza and I, huge fans of the Jeff Mackey charts. Huge fans.
I said to JC, because we've been talking to you since last week, I said, does he still put these charts out? Because I remember back in the 10, 15 years ago, Jeff, these were some of my favorite charts on the internet. I didn't know you then. And I used to think, are you actually drawing on these charts? Like, are you an artist?
I'm drawing, I'm doodling, I'm kind of just putting them in context. This is the way I see things. So it's like not following a lot of the same rules you guys do, but I love it when a good story lines up with a good chart, man, because a picture tells 1,000 words. And I love both narrative and the chart. And they were both working for Peloton going in.
JC, can we spend 5 minutes just talking about Peloton, because this is the talking?
Yeah, we're gonna do that. Save it. Let's set the stage for Amazon. Strazza doesn't like to stick to schedules, Jeff, as you could see here. We have a schedule. He just wants to completely change it live.
I'll go anywhere. Yeah.
So let's set the stage first, and let's talk about what the hell we're even doing here. Why we're even talking to Jeff. We talk so badly behind your back, like the fact that we're pretending we're friends. No. Just kidding. We love Jeff Mackey. Seriously, like Jeff Mackey coming on for Amazon earnings is pretty freaking cool. And you get Apple as a kicker. So you get a nice little bonus there. Some of us might consider Apple as a consumer product. Also, I want to hear your thoughts, but let's start with Amazon quickly and we'll get into the charts. But just hear it from the horse's mouth. Jeff, why is this company so important? Why should we care so much?
They're probably the most important retailer in the world right now, and they give you a glimpse at a lot of different companies. So this is really like Amazon itself, one-stop shopping for kind of anything you want to know. How's AI doing? Well, let's talk to Amazon. How's retail doing? It's 70% of their business and like 18% of their profits or something relatively minuscule. It's only a 5% margin business, but you don't understand the consumer unless you know what's going on at Amazon and Walmart. They have more touches, more contact, more interactions with consumers across every demographic than any company you're going to see. They're also incredibly savvy about how they invest their money, how they go about managing their earnings, and have been for decades. It's just one of those companies that, it's like we talk about companies I invest in for my kids. You kind of got to own Amazon. And you kind of, if you're in my shoes, have to know what the hell's going on at Amazon. And what you see a lot of chop. And this company's, they've grown a lot. They made Amazon Web Services into $1 billion business, or $100 billion business. Excuse me. We're talking big, huge numbers over the course of that chart, just kind of staying right where it is. So they need to break out. This thing needs to work.
So Jeff, how should fundamental investors think about Amazon today? Is this a cloud story or is this an online retail business?
Yeah, and you said it might be the most important retail. What would be what would be the other argument? Walmart?
Walmart.
Okay.
Walmart, 1.3 billion a day. If you're seeing that many Americans, you are America. People might not like that, but that is kind of the reality of how.
No doubt. But that's a good question Strazza is asking. I want to know myself.
What's that? The
what kind of business is it? How do you think about it?
Oh, it's what I'm looking at I want to see kind of wonky things. I want to see what their store performance looks like. I like them as a discretionary tell in terms of what their prime subscriptions are looking like, because that's a kind of item that people can get rid of. And you have to look at it for web services. You have to look at what that business is doing. They're so flywheeled at this point that, they took FedEx out and basically destroyed FedEx, who managed to make less money this year than they did 5 years ago, despite like $250 billion in additional shipping. Amazon just kind of took over distribution by accident as sort of an afterthought. And so they have this great cash pump that flows into them that allows them to subsidize and make 5% net margins, which is just hot garbage sauce net margin on the retail side. But 35% margin for AWS is pretty good. What we want to see tonight, we need to see 19, 20% AWS. To the extent you want to just feed the goose what they want right now. You just need the sheeple to hear numbers that they want. They want to see 20% growth on AWS, and that'll appease a lot of masses and kind of get the pressure off the NASDAQ a little bit.
So this is not a business model that's unheard of, right? Back in the day, people said, why the hell would they buy Whole Foods? Who wants this kind of low margin business? It's an ecosystem play, right? So I started out my career working at hedge funds as an accountant. And the way it was always explained to me is the way that a hedge fund works is we have management fees. These are safe and steady. They keep the lights on. They keep the business running, right? And then we got this kicker over here. We call them incentive fees. That's for everything else. That's where the growth comes in, right? And the way that I think about Amazon today, correct me if I'm wrong, is those management fees. That's the prime subscriptions. That's the retail business that keeps the lights on. And then it allows them to do other things like cloud. And that's really where their growth has come from, and their stock price performance has been driven by over the past few years. And then also those management fees from the core retail business allows them to invest in other things, right? And make big bets on AI. Is that the right way to think about this business?
And just, stick it straight into your veins and add some steroids, some testosterone boosters, because it's even better than that. They opened their stores and I'll never forget when they announced it. It was just a slaughterhouse for everybody selling groceries. You lost like $20 billion in market cap from Walmart, from Kroger, from Ralph's. It's 8 years later, they still have 150 Whole Foods. They haven't done anything, but it became a lab for all kinds of different stuff they want to do for other retailers and other services they offer and other businesses they do. The shopping carts that you can check out without ever stopping at the door. That's technology Amazon spent tons of money on. They sell it to other people. They're not expanding their stores. You'll see their physical store growth. If it does double digits today, it'll be a freaking miracle. They don't give a shit about physical retail other than just a laboratory for how they can sell stuff to other retailers.
Jeff, can I ask you this? If you were Standard & Poor's or Dow Jones and you had to put Amazon into different buckets, how would you split up Amazon in terms of consumer discretionary versus technology or communications for that matter, right?
Yeah, I mean, they're more tech company than anything else. It's hard to say that about the second largest.
More tech than retail, huh?
It's tech drives the freaking motors, man. That's where they're making their profits. That's where it's kind of embarrassing. Their third market business, which is just selling stuff for other people, is already bigger than Target. And another example of just how they scale so well. They're so efficient in terms of how they're operating that they're just kind of taking out these main store businesses. But tech is what pays for it. And so now they've got. They put football on. Are they a television studio? They literally have football. They kind of have Thursday night football. Never seen a good Thursday night football game.
Situation.
They sell ads on that. They own. America watches exactly one thing together all at once, especially now that the World Series is over. We watch football. We're a bunch of degenerates. We sit there, we gamble, we watch it. Amazon owns that night. So all of a sudden, that's just what they do, and they're selling ads off that.
What about Apple? We got a nice bonus today. We're here for Amazon earnings, but Apple's reporting as well. When I think Amazon, I wonder technology or consumer discretionary. I think you answered that very well. Thank you for that. I'll throw it right back at you with Apple. I mean, don't they sell consumer products? Is it not consumer discretionary? Is it tech? Like, how do you think about that one?
It's tech and it's just a revenue stream. It's yet what these tech companies have done is people are going to upgrade who are going to upgrade, whether it doesn't matter if they put their AI in there. I don't know what generation you guys are running, but eventually you kind of just go back and get
it's a staple.
It's a consumer staple. It's almost a consumer staple. It really is, which sounds absurd, but you know what? The iPad hasn't changed in freaking how many years? It's still a goddamn iPad. I use it more than anyone I know, and I've got one that's 5 years old, and it's kind of just fine. But you sign up for it, you subscribe to it, and they just collect these annuities. They listen to your AirPods. They kind of spend a ton of money getting the best at stuff, and you just end up returning to it time after time. So it's a great consumer tell. The upgrades are a nice discretionary tell, and obviously with the market cap it's at, it's priced in a whole shitload of excellence right now. But who can distribute more cash? Who has more cash to kind of throw at all these moonshots, all these different things than these Mag 7 companies, or at least the ones that just have the kicker, the membership kicker, which Apple has in the form of people just upgrading their Apple Care and what Amazon has with Prime.
Jeff, was this obvious to you who the AI winners would be last March, April, May, when NVIDIA started selling these chips, right? And the world was put on notice, hey, AI is here. We were talking about it on the morning show. Was it not obvious that the companies with the biggest pocketbooks and the best cash flows would be the ones to lead AI because they could make those outsized investments and could be the ones willing to lose money trying to set up the infrastructure to kind of win in AI in the future?
I think what the surprise has been is how sustainable the giants have been. Everyone wanted to use this is the biggest thing since the internet analog, and kind of IBM, it turns out, didn't win the internet. Probably should have won the internet. They were sitting right there. It took Microsoft a while to figure out the internet. But the incumbent players who have really kind of dominated it, at least to this point, we'll see how they're able to maintain it. But, it's everything looks obvious in retrospect, but I, have a lot more money if I would have just gone with that instinct and bought the 7 of them and kind of got the hell out of Dodge.
And you pay attention to these earnings reports, right? So like you've seen over the past couple of quarters, they're starting to segment out or segregate the amount of money that they spend investing in this AI infrastructure. And some of these numbers from the Mag 7s are blowing my mind. Talking about 5, 10, $15 billion a quarter in AI. The way I think about that when I see that in an earnings report from one of the Mag 7s is that's NVIDIA's revenue. Is that the right way to think about that?
Is there any news out? Is there any news out, Spencer?
Is there any news out? Amazon's blasting off right now. So where are we at? Yeah, Amazon's gonna at this rate hit 200 any minute now. The Q3 sales Street was looking for 157 approximately. Sorry, I'm seeing 160. Yeah, 157 was the estimate. 158 was the actual for the revenue. The EPS $1.43 versus $1.14. Those are GAAP numbers, not adjusted. I'm sure there's a different number floating around there somewhere, but those are the 143 versus the 114 is what the algos are seeing right now. So blasting off.
God bless Amazon for having the balls to downgrade their guidance. Last quarter they came in and they took their numbers down themselves to I think 182.5 for their top end of their revenue, and they just went ahead and beat that. So they got the stock done for guiding down, and then they beat the number that was already outside the range. This is higher than the original range they had for their revenue estimate for this quarter. So they used to give much less of a shit about estimates than they do now. I kind of miss the old Amazon when they would say we have no economic opinions and just go straight to Q&A. It was legendary. But either way, these numbers are just they're obscene. It's just it's a smoke show.
Stock's at 198 right now.
From a reaction standpoint, JC, they killed this with the broader market today, so it's kind of coming off of a low level. Like it's just back to where it was yesterday.
Amazon fell 3.5%, 3.4% during the day. It's up 6.5% now, 198.
Jeff, what did you say the street wanted to see for AWS? You said 20, right? 20%.
Yep, I said 20 was the magic number.
It was 19. So
it was 19. Okay, so 19 was kind of it's that meets the whisper. People might haggle about that. They needed to be 19. 20 would have gotten me happier. Why you're not seeing it over 200 is probably because they didn't give you 20.
Not yet.
I got to tell you guys, throw up that Amazon chart for me, please, Spencer Israel.
Yeah.
I got to tell you, this 200, if it sticks that, it's gone, man. That's the level. For me, when I have clean resistance like this, if you get a gap and go on an earnings event or something and it gaps up above that former resistance, there's nothing more bullish to me. You know, we call it a gap and go. You can call it a breakaway gap. You can call it whatever the fuck you want. I mean, it's going. So I don't know. It's got to stick the landing tomorrow. Obviously, we're live at 4:04 p.m. Eastern time. This thing has been consolidating for 3 years now. A breakout above 200, gap and go off to the races. You're looking at 30-40% of upside. And the reason I think that that's so important, Jeff, and I want you to tell me if you think I'm crazy, but Spencer, if you throw up slide 11, we're looking at consumer discretionary relative to the S&P 500 10-year top, massive 10-year top. If this is a 10-year top and this completes to the downside, bull market canceled. It's over. That's it. Yeah. Sayonara. Yeah. They gotta stick this. They gotta come in or it's over. My bet is they come in because I don't think the bull market's over, and it would be if this completes. If they're coming in buying Amazon above 200, I think you gotta be all in. It's going a lot higher, and that speaks to consumer discretionary. Amazon's 22% of this index, and that's an important part of this market. If you think this bull market has legs, you want to see this Amazon working.
I mean, it's going to be hard for them to beat the crap out of numbers this badly, and I'm going to dig in there in about 2 minutes and sandbag Q4 enough. You know, it would have been hard for them to post these kind of numbers in a world where they can spend whatever they want on capex. They can drag people back to the office by the hair. They can really kind of create Prime Day out of ether if they need to. They're just earning a lot of money, and so I would expect the guidance is probably a little soft. But you're exactly right, JC. It's this thing. It's had a lot of haters. It's been consolidating. You don't see consolidations like this in companies that are kind of this popular for 3-4 years. One of the headwinds has been Bezos has been just selling a gazillion dollars worth of stock every time it's gotten in this range. So that would be nice if he didn't do that this time. It'd be a super, thank you, Father, whatever.
When founders get divorced, they become headwinds.
A little bit. That's it's. I would encourage everyone to stay married. It's much simpler.
Is that from The Intelligent Investor? Strazza?
No, that's true.
You learned that?
That's real. I learned that in business school. Yeah.
Jeff Mackey, I know you got to sneak off and I'm
going to sneak off. Check this out, and I'll be right back.
Any thoughts before you run? Any do you want to leave us with?
I'm expecting good things. This is a huge win for Amazon. They needed this quarter. Jazzy needs this quarter. He needs to kind of get out of this dead period that we've been in since he's taken over. He's done a lot of nice things. He's done a lot of smart things. The stock hasn't reflected it. And eventually investors kind of care about the stock more than do about the nice things. So I'm going to go check it out and see what kind of traction he's getting. I'll be right back with you guys.
All right. Chime in on the chat when you're ready. Jeff.
Danny Jazzy. Sometimes he's good. Sometimes he's terrible. But you get what you pay for with Amazon shares.
Let me tell you, Strazza. How? First of all, we'll get into we'll get into the rest of the market now. But can we just talk about how great Jeff Mackey is? How great is that?
Jeff is someone who I used to listen to on CNBC and on other mediums 10, 15, 20 years ago. And I learned so much from the way that he thinks about businesses, the way that he thinks about these business models, the way that he particularly made himself an expert in this industry group and really dove in and owned it. Always just appealed to me so much. And now we're getting to hang out with him and dive into these earnings and kind of pick them apart in real time. And that's super cool. And we're going to do more of this.
And what's awesome is that, like, for me, I'm not like a fundamental guy. I don't know anything about this stuff. I'm more into the technical analysis, but I'm aware enough to understand these companies. Like, I understand Amazon. I use it every day. I understand Apple. I use it every day. I understand Wingstop, the lemon pepper wings on the Wingstop. Fantastic. Wendy's has cheeseburgers. Domino's Pizza has pizza. McDonald's. I understand these companies. So if I can pick the brain of somebody who actually gets it, and this is what he's an expert in, right? So the way if you're new to Jeff Mackey, the way he talks about it is that, how normal kids grow up playing catch in the backyard with your father. Him and his father would go to malls and check out retail locations and talk about the businesses of retailers. His father was the CEO of Target for over 10 years, long career there, so understands these businesses. So like for Mackey, this is just how he thinks. Like, are you kidding me? You know how excited he is right now going through these damn Amazon numbers? He's like a kid in a candy store. So we let him do it. It's fantastic. But Strazza, any thoughts? I want to get into a few of the charts and kind of set the stage here.
I want to talk about the situation here, right? We are reaction people, right? When an earnings report is released and hits the wire, we look at one thing. We don't run to the SEC Edgar database to pull out the 8K and dig through it. We look right to
I wouldn't even know where to do that.
Yes, you would. We have people at our company who
I hear about this Edgar date. This Edgar guy must be the man. Is he friends with Fred? You know how there's like Fred and then you got Edgar? Like these are like,
yeah.
Fred and Edgar walk into a bar, right? And
but think about it this way: we're the reaction people, right? We're the technical people. We go right to the price chart. What does the market think? Because the market is what? The market is the collective opinion of all of the investors in Amazon right now, telling you what they think about Amazon's report. So Jeff could come on here and say, this was an incredible report. It was so good. They hit it out of the park. But if we look at the price chart and it's down 10%, we say, well, other investors don't think so, right? But we don't have that aspect or that angle most of the time. We're just looking at the reaction. We're saying, here's the collective opinion of Amazon investors based on this earnings report. They liked it. Great. We like it too. And that's usually what we do. However, I'm a big context guy, and you know that. I like to look at price charts within the context or knowing the context or the narrative about that price chart. In other words, oil, there's an embargo, there's this. The price should be doing this. And then I look at the price chart, but it's doing that. That's some of the best information that we have. So now we have a guy who has an expert opinion on the actual fundamentals of these earnings reports, where he could come in and say, that's really good, right? This is a fantastic report. And then we could look at it and say, but the price is dropping. The reaction was not really good. And we compare those things together. And a really, really sweet thing happens when we do that, right? Where we could say, this is the narrative. This is what the reaction should be. And this is what's actually happening in reality. So for us as price action people, when we have that perspective and the correct perspective about what the price action should be, and then we can compare it to the actual price action, it really gives us a true edge in what we're trying to do here.
So for me, I love Jeff and I love learning from him and picking his brain, but I'm just going to tell you that if Amazon's not above 200, I ain't going to own it.
That's my point.
Right?
You just made my point.
Jeff Mackey could come out here right now and tell me that Amazon just came out for a cure for cancer. They're going to cure cancer, JC. I'm like, yeah, that's great. But if the stock's not above 200, I'm still not going to buy it. Right? You see?
Right.
So they
like it. They like it. They like it enough for now. But I think, JC, I'm with you. It's 200 or nothing. It's 200 or it's the same situation. For us as technical people, if it's not 200 tomorrow, it's the same range it was in yesterday and the day before and the week before that and the month before that. Amazon is
all right. Listen,
one of those
let's get into a few of the charts. Strazza's going to take his victory lap on the Peloton. Throw up a couple of charts quick before we bring in Jeff back in here, Spencer. But I think it's important to set the stage because Amazon has yet to break out above the prior cycle's highs. Can you throw up slide 6 and we'll just walk through them quick?
Am I supposed to figure out how Amazon?
What's up, Jeff?
Hey guys, yeah, they cured cancer. I don't know if you guys saw that in the release there, but Amazon has cured cancer. I'm kidding. No, they didn't, and it's not breaking above 200 because this was kind of on it. It was exceptional, but within reasonable exceptional. Like we talked about with the AWS, we were looking for 20 to get our Yahtzee number. You know, it even kind of rhythms with 200 a little bit for those of you who are into that stuff. You know, they came up with 19%. That's perfect. That's cromulent, as we used to say in The Simpsons. Physical store growth, 5%. So that's pretty mediocre. That's why you can't really call them a pure retailer because, you know, that's pretty run-of-the-mill retail type of growth. You know, subscriptions were incredible. The margins actually were for AWS were just, you know, they were actually growing by something looks like 290 basis points, near as I can tell. So, you know, this was a great quarter. Does it break them out of any range? You know, the people who were skeptical of them before, this isn't a, you know, stick it in your pipe type of quarter. This is just really kind of exceptional. The cash flow is the story here, though. And these guys really have a dial where they can turn it. And it's a time-honored tradition since the IPO. Amazon had the famous S1 where they came out and said, listen, we're going to reinvest in the company all the time. and we give not one shit for your quarterly earnings. We are going to reinvest and reinvest. And so when they, you know, their capex is really widely watched, but they're also the company that I'm going to trust most to make these AI expenditures. And so as we get into the beef of the call later, and I'm going to do that, and I'll kind of write it up and we'll summarize it. But when they get into the meat of the call, that's what people are going to ask them about first, is going to be, are you spending on AWS? What are you seeing for your returns? Then they're going to get into the ad business, which, you know, it's Amazon's buying live sports along with Netflix. They're going to own football on the day after Thanksgiving. That's worth a lot to them. Their ad business is going to be just fine. They're going to get growth there, but that's a long-term story and it's expensive to build it out. And so, you know, the same people who are criticizing Amazon today will criticize them again. But this quarter is not a good, you know, this isn't a quarter that's going to give the bears a chance to short it.
Do you not look at a business like this with their cash flow generation and think they should be buying back a ton of shares or paying a dividend?
Not as long as they have stuff to do. You know, they're growing AWS. That's a huge business. It's an incredibly profitable, and they're growing it really fast. And again, they built the largest retailer in the world with a bunch of counterintuitive stuff. I mean, it's the idea that Prime wasn't even really a product before. You guys remember 10 years ago, like when Prime came out and the idea was, you know, it ensures delivery in about 2 days. It's like, what the hell does about mean? It was literally not even a product. You know, but they've just managed to kind of invest in that and plow away at it until now it's Thursday night football. And so any sporting degenerate has to have it. They do that over and over again. They can get you stuff in 1 day. They've done the same kind of thing with distribution centers. Strazza, one of the things that they've spent on just a shitload of money quietly without really talking about it. They used to talk about it much more, but they're getting down to same day delivery. And that was just a process of them building DCs, distribution centers all over the world in just a regional way. Just during COVID, they said, you know what, we're just going to buy these warehouses. We're going to build them out and we're going to replicate what Target and Walmart have, which is just, we're going to be within 10 miles of 90% of the population. And once you do that, you can send out cheaper stuff.
Can I chime in on can I chime in quickly on the only thing that actually pays any of us here, and that's the price of the stock? Just want to remind everybody not to be that guy, but somebody has to be that guy. The stock right now is pushing 196. That would put it above yesterday's high. So we're talking now Thursday afternoon. Yesterday's high is being Wednesday. That would be Wednesday the 30th. Those highs we're looking at 195.60 or so. If we're opening up tomorrow above that around 196 and we stick that, you know, I said before 200 is the level. And while it is, that 196 is a big one too.
Yeah, I want to see a clean breakout with these guys. They've been there so long, JC. I want to see this thing 200 with and I would get long and not give a crap what
Spencer,
I'm
go to slide 6 and let's talk about why this is so important. We're looking at this Amazon chart that has yet to break out above the prior cycle's highs. Jeff is expressing his frustrations. Investors in consumer discretionary at the index levels are struggling. Throw up, Spencer, the NVIDIA Microsoft chart so you can see that these technology companies have already broken out, right? Those are the prior cycle's highs from late 21. Already broke out. Look at the next one, Apple. Again, already broke out. Already above those prior cycles highs and making new all-time highs. That's in technology. Now, as you go down, technology is on a relative basis. So the S&P Technology Index, Spencer, this is slide 9, relative to the S&P 500. So tech relative to the rest of the market is now back to where it peaked in the dot-com bubble highs. Literally the same price. Some people are like, well, JC, the market doesn't have memory going back that long. But JC, the components are different. But JC, you know, they're different investors. The people who bought there are dead now. They're not even, or retired. They're not even in the business. That's what they tell me. But as you can see here, go to the next slide, Spencer. While all those things might be true theoretically, the fact of the matter is large cap technology has been underperforming for most of this year. And small cap technology has been underperforming for the last 18 months. So you might think it's a coincidence that this is happening at the same levels it happened 24 years ago. I don't really look at that as that much of a coincidence. So when I look at the next one, which is consumer discretionary relative to the rest of the market, if I'm seeing technology on a relative basis underperforming, Spencer, go to the discretionary chart so you can see that massive top. is it a massive top or not? Because if it is a massive top and technology is underperforming, that's a problem for this overall market. So when we talk about these major levels, go to the Amazon chart next and throw up the discretionaries. This is Amazon. We're not above the prior cycle's highs. This is 22% of consumer discretionary. Go to the next one, Tesla. Tesla's about 15% of consumer discretionary. Second largest component, also not above the prior cycle's highs. So when I go to the long-term one, the next one. Here we're looking at consumer discretionaries on an equally weighted basis, taking out the Amazon effect, versus consumer staples on an equally weighted basis, taking out that Procter & Gamble, Costco, and Walmart effect. This is a huge base. If consumer discretionary on an equally weighted basis breaks out relative to staples, that's really encouraging for equities. So Amazon needs to step in because consumer discretionaries need to get going. So then we'll finish up with communications, because I think that's the last piece to this puzzle, making new all-time highs, being driven by Meta, being driven by Google. Those are not tech stocks. Those are communication stocks. Netflix as well. This index is already making new all-time highs while discretionary is not. And then when you look at the components, Google and Meta making new all-time highs, like Nvidia, like Microsoft, like Apple, above those prior cycles highs. Amazon is not, Tesla is not, but I'll give you this last one, which is slide 17, and I'll leave it here. This is consumer staples on an equally weighted basis relative to the rest of the market on an equally weighted basis. So the defensive areas versus S&Ps, and they're making new all-time lows, right? So if this line is going down, that's a good thing for equities, particularly if discretionary gets going. That is several reasons why, on top of everything that Jeff said, I think Amazon is so important to the overall market, whether you're going to trade the stock or not.
I mean, clearly, I'm just kind of digging through some of the data here, and it's all just mind blowing. They're talking about how the Cowboys and the freaking Cowboys Giants football game was the third most streamed sporting event ever, which is just bonkers. Just bonkers. That's the shittiest football game I can even imagine. The dreck that we threw up watching guys play 3 days after they got concussed is the third most sporting event.
Are they getting that viewership because of where it's being streamed versus the actual content itself?
Where it's being streamed, we only heard the viewership, I think, early on.
Really?
Yeah. So it's in spite of putting it on Prime, it was that good, right, Jeff?
Got it.
Oh, absolutely. They're already better than NFL Network, but it shows kind of Amazon's willingness to go out there and just try crap and kind of break it a little bit, not be that good. The broadcasts have gotten better. It still kind of has a little bit of a CFL vibe, like a little bit of a lesser football broadcast type of vibe. Maybe that's just not getting used to it or whatever, but it's very much in spite of where it's broadcast, they're still managing to pull those type of numbers. It's just where America gathers. And it shows how smart they are. Netflix as well, where it's really just a land grab for this type of content, because man, if you're Amazon, again, they have games now on Black Friday. That's going to be what people do. And America, that ad space is worth a lot. They'll be able to monetize that.
And YouTube TV also is in that conversation. For me, this is a perfect example of the big get bigger, and here's how, right? Amazon has the money to make the right bid to win Thursday Night Football and probably Monday Night Football and Sunday Night Football.
But I think it's what Jeff said before, Strazza. They just try shit. They tried to make a phone, and the phone sucked, and then they stopped doing that. Things. And now right?
But they're going to keep trying things, and here's why. They can miss 10 times, and they hit big once, and it pays for the other 9 that they missed on.
Oh, right? Wait a minute. It sounds like there's a segue. Sounds like there's a segue here.
It becomes because. But hold on.
When Jeff Mackey and Steve Strazza, both of them absolutely nailed the Peloton trade. So while we're here talking about Amazon and retailers, and we're going to get Apple in 7 minutes, guys, this is your time for the end zone dance. Steve Strazza, we had a 10x in Peloton today. Spencer, drop the link where people can start getting those alerts. Strazza, what happened? Talk to me.
But there's no end zone dance. There's a let's sell these now as volatility gets crushed, right? We got what we wanted, 10x. That's fantastic. And let's look for a place to redeploy that capital to have the same kind of a big winner.
Stop.
No, but that's it.
I like to break balls, be like, come on, when you score a touchdown, act like you've been there. I'm that guy that reminds everybody of that. But in this case, it literally was a 10x. So we got to give Strazza the flowers, right? Come on.
I'm not going to make a big deal out of this because we're trading a naked long call option strategy. So we should go 10x. We have to go 10x from time to time.
Look how mature he is, Jeff. You see that? He's not even playing along.
I know. He's allergic to making money. I like it though. I like his sense of responsibility. I really do. And I really admire the 10x that he got because I also was long Peloton and I had to stick with the measly 25% from the shares being up. Which, I'm doing a little bit of a dance. So, I did a Peloton ride to celebrate. I don't know if that counts as a dance, but it burned off some nice calories.
What did you see in it? Hold on. I want to know from Jeff's perspective, because this one was probably hard for a fundamental person to wrap their head around.
Right. So explain why you got in. So Strazza, explain why you got in technically. And then Jeff, explain why you got in other than your 3,000 rides or whatever ridiculous number you're putting up these days. What'd you see, Strazza?
For me, it was simple. The whole space was bottoming, right? The whole ARK, speculative tech, overpriced growth theme has been bottoming for 2 years now, building out these beautiful rounding bottom patterns, right? And Peloton was up 40% after the last earnings reaction. So that was a big shift in earnings sentiment, right? We're always looking at the reaction. We had a great reaction last quarter. And then we got up there and it was high and tight in this sweet coil. And we said, all the other Peloton-like stocks are starting to work. Look at Zoom, look at Upstart, look at all these ARKy names, right? They're working. Look at Robinhood. So we said, let's put a gamble on this coil. Let's try to be able to sell the double on some sort of automatic reaction out of that pattern and then give ourselves a free ride into earnings where anything could happen. And to be fair, we did the same thing with Robinhood, where we sold the double and we said we have a free ride into earnings. And when I say sell the double, we're selling half of our position at a double. So effectively, our cost basis on that trade is zero. Robinhood was down 15% today, right? So those are gone now. No harm, no foul. We made our money back on selling the double. And then Peloton was up 30%, and we make 10x on that. The 10x's are going to so much more than pay for the ones that go back to zero, right? So we're just trying to
hold on. So then for Robinhood, it was a free ride. For Peloton, it was a free ride.
They're both free rides.
Robinhood ended up being a wash, and the Peloton went up to 10x today, right? Do I have that right?
Yes, but somebody came to me and said, why didn't we sell the Robinhood? It was up 3x yesterday. I said, because it would be up 30x if we got the reaction that we wanted, right?
So we already sold half.
Yeah, we already sold half. Yeah. We're not thinking about it at that point.
Love that. Jeff, other than, you got a nice firm tush. I saw you the other day. You're looking good.
Thank you, baby.
What was the reason for the Peloton buy?
It actually ties in. It's not as far afield as it sounds. We're seeing nice bottoms in a lot of these names that have been left for dead. A lot of the nice post kind of COVID names. We've seen it in consumer names, JC, places that you and I would not deign to eat more than we have to for research purposes. Places like Dave & Buster's, Texas Roadhouse, Cheesecake Factory, which I was dumb enough to miss today, kicking myself in the ass for that. You see a lot of these rounding under charts. You see a lot of stocks that are behaving like consumers are going back out again a little bit. And so what am I learning from Amazon? Well, maybe it's not Amazon trade itself, but this doesn't make me less confident on, say, Build-A-Bear, which I'm also long, which actually has much better price action than Amazon and needs a good consumer tailwind, which we're seeing. Is Amazon great? Nope. Is it great enough to break it out? Maybe not. They're a huge company, so a certain amount of excellence is priced in, and this is excellent. So what the hell? That's what they're supposed to do. But if you're Dave & Buster's, you need a consumer showing up. And what Amazon's shown me is that the consumer's showing up. You can show me all kinds of economic models that'll tell you that he's not. I really don't care, because as long as Walmart and Amazon and that kind of cabal of these consumer names are performing, then you know what? I'm going to give them the benefit of the doubt and let your surveys kind of go play with whatever economists like to do.
So if those stocks are working, just ignore the economists altogether. They're that important.
If you get them all working like this, again, there's just not everyone. Hypothetically, the consumer's supposed to be nervous before the election. We're supposed to be pricing in all kinds of risk.
That's
Everyone's supposed to be all edgy. You know what? They're not. We're still buying crap. We're watching Giants versus the Cowboys. I can't think of something more complacent than watching those two NFC East teams play.
JC, we're gonna dive in. There's so much that I want to talk about.
You guys dive in. I'm gonna go YOLO. Both of you did a great job. Both Jeff Mackey and Steve Strazza nailing the Peloton trade. We're going to nail this trade too. It's at 196. If it sticks that landing, I'm in. Above 200, flip the book long. Guys, I love you. You guys dork out. Have fun. Appreciate you.
Happy
Thanks,
Halloween.
JC. Take
Happy
it easy.
birthdays to the boys. He's got a big night. So, Jeff, let's just nerd out. I want to hit on broader retail impact, right? In other words, what is the read on the U.S. consumer, or really the global consumer, based on this report? In other words, how much are you overthinking the rest of the discretionary or retail space based on an Amazon report? Are you not?
Not tons, because we didn't get a huge extreme number. Again, this is in line with excellence. So it looks like they took Q4 up a little bit, but not super high. They had the temerity to, again, they lowered their range and then beat the original range on their revenues for this quarter. So they're still being relatively cautious, but what I'm reading, it's not a collapse. They would tell us if things sucked because they love to badmouth the results at Amazon, and it's better than that. So I think it's okay to kind of be a little cautiously enthusiastic. Maybe it's not going to be a terrible Christmas. We'll see.
Is it fair to say that the leadership at Amazon, in terms of financial reporting, has not only been spot on forever, my whole career, but they've actually reinvented the playbook. They've rewritten the rules. You alluded to the S1. I was an auditor 15 years ago. The Amazon S1 is famous in the audit world.
Is it really? I'm so delighted to not be obscure. I had no idea. That's great.
It was a joke. We were like, what are these people talking about? This will never work. They're going to reinvest everything always and never talk about making real money. And they think that that's some sort of a business model. Wall Street analysts
pulled it off.
The sell side thought it was crazy. Did they not? 20 years ago. These guys are nuts. Jeff Bezos, he's a crazy person. He's selling.
They thought they were batshit. I think it's 2003. His annual letter came out and he said, well, on the one side, we increased our revenues, and our growth was going skyrocket. Right. On the other side, we lost 80% of the value of our stock. So that was kind of a bummer. That's the kind of stuff that people who held Amazon the whole way, they're unicorns to me, or they're just locked up in investment or option hell. They can't sell.
Bad holders who got lucky in a lot of cases. But the Amazon culture has always been, fuck you, we know what we're doing. Right.
And you know what? They're right. You better be smart. If you're going to say that, you better be right. And they have been. Well, how's Apple doing? What do we got?
We got a top line beat and a bottom line beat. Where's the chart? Let's bring the chart up on the screen if we can. Volatile is what I would say. It's literally been out for a minute, right? So 2 minutes now. What else do I have for you here?
Is this iPhone all about the AI upgrade cycle at this point? Is there anything that matters to Apple? I understand services are big, but the next couple of quarters, it's about how many people are buying new iPhones because they want the new AI stuff.
All right, reading from the release, services revenue all-time high. iPhone still matters, obviously. It's Apple. So iPhone sales 46.2 billion versus 43.8 in the prior quarter. They declared it. Is that 25 cent?
Let me just say,
per share dividend. Is that new? I don't know if it's new.
I love it when they sell it before the call. I love it when they come in and they sell the filing, right? And then they end up buying the call. And then sometimes where you get these situations where a company reports in the morning and you get a big after hours downdraft, down 10% in the pre-market. And then the call comes on and the call runs into the open market session, right? And you see some huge, not just a pare back of those losses, but it just flips it green. Those are the best earnings situations. And I don't know what these people say sometimes, or Jeff, if they hold the best information for the last couple minutes of the call, but it seems like as soon as that call ends, and then it's off to the races, and you get these immediate reactions that get reversed, and then after the call, it's off to the races, and we're going higher and making new highs.
It's like your options trade where you got to listen to a lot of calls to actually find the ones where the market gets it super wrong right away. But when you find them, it's absolutely glorious.
That's a really important note.
It's
that's
rare.
really
it's unique. Yes.
Yeah, and Jeff, I think that's more worth repeating. Right? Is you are a veteran of these earnings calls, right? Specifically retail earnings calls, so you know what to listen for, even if it's as little as like what they don't say or a keyword that they didn't use that they used last time and they didn't use this time, right? And it takes like almost like screen time. It takes screen time. It takes or in this case maybe phone time to really understand what they usually say versus what they're saying now, if that's going to be your thing, right?
And it's a little bit of a tone thing. It's a little bit of you have to understand that Amazon's always going to sandbag. You'd be more worried about them if they didn't. They're always going to be super cautious because that works for them. They're never going to promise profits because honestly, they're openly investing in whatever shiny object they think works best. And they're super good at picking the shiny objects that are actually precious gems. So you give them the benefit of a doubt. It's Apple's going to be the same way. They're going to give you a huge amount of cash. What kind of growth are they supposed to do? Everyone on earth who wants one has an iPhone, and a lot of people would kind of like a different phone if they had the choice, but they don't. Well, so it's going to be a GDP grower, and that's kind of what we're seeing.
Is there another company in the history of the stock market that has made sell-side analysts look worse than Amazon?
God, it's really hard to. I mean, again, if you're going to tell everyone, fuck off, we don't care about earnings, you got to be so good. You got to be, you have to really, really nail it, and they took risks that were definitely not intuitive. It looks like Apple's getting sold here a little bit. That might be a fly in the ointment. And again, I don't, I'm long Amazon, but definitely not as a trade because it's a hope trade. I hope it goes over 200 and then I'll buy more. But in the meantime, it's the kind of company that I just want to own, especially when I'm investing with my kids. There's stuff that I want to own. They're long Netflix, they're long Spotify, they're long companies that are part of people's lives.
We trade a lot of stocks with our different research products at All Star Charts. But then we also talk about like just owning stuff in the IRA, like buying shit when it's down 15, 20%, whatever, like buy any dip that you can get. And that's Amazon for me. Like I just buy a share at a time in the IRA when the thing gets killed for no reason, or when it doesn't look like the other Mag 7 stocks. And I feel like this is just a name that if you're invested in the global economy or the US economy, or if you're invested as a United States investor, you can't not own some of it.
Or you're flying blind. Let's talk about Biff there, who points out quite correctly and quite aptly that these are names that, are the hugest names on earth. And we're hyping up the earnings calls because the stocks are moving 2%. So, who gives a shit? And I get it.
What's man, you can trade $2 trillion?
You trade a lot of stock off these, though. These are consumer tells, folks. These Amazon is effectively the department store of Earth. And so, also, what they say about the consumer matters a lot.
And we're talking about stocks right now, right? And we're talking about the mechanics of the stock market and how this shit works, right? So, Biff, you're right. They're boring. Amazon is boring today. I believe it trades at like 20 times earnings. That's crazy. But there was a time that Jeff and I are talking about and relating back to 10, 20 years ago where this company was 100 times earnings. And you would read their earnings calls or listen to their earnings calls and say, this is absolutely crazy. What the hell are they talking about? But they were the hot stocks. Like this was the hot stock 20 years ago. And I get
it. And now it's all grown up. And so what you see with the ones that grow up, most of them kind of give it back. You look at the gap is, if you can pull up a max chart of that, it's one of my all-time favorite long-term charts because it's the GOAT of specialty retailer. It went from like 10 cents to 50 in 1999 when it was everybody's swing dance, and Winona Ryder's wearing Gap and it was the hottest thing since sliced bread. And the stock has been just dead flat ass nothing for 20 years since. But they didn't go bankrupt, but what you see in a case like Amazon, they're the kind of companies that they have to base for a while. It'll be hot again. And the reason you stay long them is because you're going to get a 40% move off it, once it's done basing. This is a really long base. Technically, those tend to resolve higher and they tend to go there in a hurry.
The company has made you no money in 4 years. This is Amazon. This is the top retailer in the world by far. This is one of the most, strongest, most powerful companies, big tech companies in the world. They are
of the three American big retailers. They're absolutely, they're like with Costco, Walmart, and Amazon.
I want to tell a story. that I think speaks to the industry dominance and the power of these kinds of companies. And this story is about YouTube TV, so it's about Google and not Amazon. But you were just talking about Thursday Night Football. And here's why Amazon is paying what seems to be an insane amount of money for these NFL rights, right, to these games. I was watching the Giants game 3 weeks ago. I live in Florida, so I don't get it. Okay, so it was like a special thing for me. I got a notification on my cell phone that said, turn on your television. You get to watch the Giants today. It was not on any local channels. I said, that's fantastic. And I turned to my girlfriend at the time. I said, they're going to cut me off. I'm going to cut me off after the first quarter. They didn't, right? It was a close game. They didn't cut me off at halftime. Third quarter passed by. They didn't cut me off after the third quarter. We're walking into the fourth quarter. Really tight game with the Eagles, a game that I need to watch, right? And they know me as a customer. They have all of my data. They have literally everything that I do. This is Google, right? So they're letting me watch up until the 2-minute warning. And it's a tie game. And then they cut me off and they say, listen, dude, it's okay. You can watch the rest of the game. Just click this button. Like, you don't even have to do anything. Like, blink your eye, and then we'll put the game back on. We're going to set you up for a 7-day free trial, and we're going to ding you for $500 next Sunday. No one in that situation is saying no. That is big tech, right? That is the power of big tech. They know these things. They know who you are. They know how to get you. They say, hey, you watched the last 2 minutes of this game. It's fine, right? We're going to ding you next Sunday. No one's remembering. Come next Sunday. Now I paid $500 for NFL Sunday ticket. I feel like I have to watch more football than I would comfortably want to watch in a year, but I'm going to do that.
And the pride from your cold, dead fingers. I mean, it's you want to get political, you cancel the Washington Post. You sure as hell don't give up your Prime. You know, it's like, hey, I'm not going to give up Prime there. I didn't say I hated Jeff Bezos. I just said I didn't want to read his newspaper.
But as a long-term investor, you have to own the companies that have the power to do that to you as a consumer. You're crazy not to, right? Like, this is the system that they've built, and they're going to keep running this playbook back forever and ever and ever until the day we all die.
Yeah, and you have to kind of pay attention to them. You know, that's the reason I'm listening to these calls, is because occasionally you get the dislocations. You got to know sort of who the executives are, how they're playing it, and where they're taking these companies, because it's all about capital allocation. And you give them largely the benefit of the doubt, but once you start micro kind of going through, I don't like the way Amazon spent this quarter or that, you're kind of, really, are you a better capital allocator than Jeff Bezos because he's the best one in history? So maybe not. Maybe that's not who you are. Maybe you should just kind of listen to him for a quarter or two. And of course the stocks are going to top out at some point, but not at this point. Not here.
I want to address a couple comments in the chat. The first is from Eugenio, Apple beats but down 1.8%. The second's from Joe. Not going to lie, these reactions in price are very disappointing. With regards to that first comment, Apple beats, but it's down 1.8%. I am as guilty as anybody on earth of being a slave to that mentality. Was it a beat or was it a miss? And that's what matters. And that's not what matters. That is not what matters, right? The beat or the miss is somewhat irrelevant, right? It's really about the reaction to the beat or the miss. And there are so many things that matter more than the numbers. Like, for example, guidance matters more than earnings, but also the reason price action matters a lot, but also the overall market matters a lot, right? Was it a terrible day? If it was a terrible day and you have a great report, sorry, like, not your fault, but like, you're going to get sold, right? If it was a great day, you have a shit report, good for you. You know what I mean? Like, it's going to be fine. So there are all these things that matter more than the numbers themselves. So don't be a slave to the beat or the miss. That's what I was saying. I was for many years, right?
I'm big on putting it all into context. Look at Estee Lauder and Starbucks today. They both essentially did the same thing, which is we have no idea what we're going to earn for the next year or so. We got shit that's broken, and so we're checking all our estimates and we're going to throw them away. Starbucks has a new CEO who is the cat's pajamas. Apparently he invented coffee and the burrito. Whatever his story is, they're giving him the benefit of the doubt. And he's coming in and pointing out the things that are obviously wrong at Starbucks. It should take less than 4 minutes to get a cup of coffee. And the street said, hallelujah. Holy crap, take your estimates, get rid of them, because this is going to improve traffic over time. It's Estee Lauder on the other hand said, we're firing our CEO. Oops. That's the difference in a down 20% move versus up 2% on the same warning.
Jeff, I want to make your point incredibly clear. Brian Nichols came in and said, it's absolutely fucking crazy that you have to walk into Starbucks and wait 15 minutes for a drip coffee. That's not okay anymore. And the stock hops on something that stupid.
Because holy crap, no one said that there before. That what a refreshing thing to hear from Starbucks, that you actually value my time on any type of level. I'm a caffeine junkie who stated my preference and my need, in fact, for this speed because my head is pounding like a jackhammer and I'm trying to get to work. And you're going to stand me in line for 20 minutes because someone's ordering a grenadine frappuccino with pumpkin spice. Bullshit. Just calling bullshit. It's worth $20 billion to the stock and counting.
We want the Pike Place and we want it fast.
Exactly. And just give me an IV, just give me a syringe and you can probably do that right at the counter.
What would you say? I'm going to throw a hot question at you and you probably hate me for it, but it's responsible on my end. What is the key data point, right? Or the biggest metric to look at in both these reports, right? So you're diving into the Amazon and the Apple reports today. What is the biggest metric or key performance indicator that you're paying attention to when you're diving through those?
I'm looking at their comps. When I go in there, I want to see how they're doing versus the overall growth of internet sales. I think they're lagging that a little bit. I want to break that down more as I go in and listen to the call, because you want Amazon, they've got an enormous percentage of market share of the online sales. They better maintain that. So I'm looking at that. I'm looking at third party. And overall, I'm looking at their comps of their retailers because they're not very good physical retailers. But if they're getting 5% comps, which it looks like they did, that's pretty good. So give me those metrics for what Amazon's doing, and and throw in a little bit of operating income just because they're suddenly awash in cash where they weren't before. Apple is, they're so huge at this point with so many things that kind of are not brand new. You got to, that's going to be, we'll see if AI becomes useful. I don't know if you guys have downloaded a new thing yet, but disappointing springs to mind, and who gives a shit also leaps into the forefront of your brain as you play with the new AI.
Do you think that Apple, the executive office at Apple, do you think they want to get away from the services thing or they want to lean into it?
I think they're leaning into everything. I think they're awash in cash, and I think they're just, at this point, they just kind of are juggling stuff and frankly are not doing great things in terms of coming out with new stuff. And so they're just trying to keep up. They would love to be outside that position. They would love not to be playing kind of this perpetual lame ass catch up. In terms of stuff like AI, they would, I'm sure, regard themselves as a cutting edge company. They're clearly not, though. If you're selling 60% of the phones in America, it doesn't pay to be that avant-garde, because both me and my mom have to find it useful.
When I think about Apple, the true risk to Apple's business long term is that something else will be the iPhone in the future, and maybe they won't own that device, right?
Right.
We all stare at our phone all day long. Right. And they own that. And that's great. And that's the position that they're in right now. And they hoped that the new phone would be the watch. And I think it's pretty clear that it won't be the watch at this point. Maybe the watch is a part of something else. But if it's some sort of goggles situation or this meta thing that Facebook is doing and Apple doesn't own that, that changes everything. Their valuation changes forever. They can't sell at the same multiple that they do today if they don't own the device that's in all of our hands or in our eyeballs all day.
And that's how they'll fail. They don't have infinity money. It just kind of looks like it. And so you come out and up with those Apple Vision Pro things and you take one look at it and it's like, you know what? I'm not secure enough to wear goggles that just black out my entire universe. And I work in my house. And so my family's the only one here, and I don't want, that's just not a thing that people are going to wear. The shades that Meta came out with are immediately cooler. They're immediately something that you can look at and say, oh, that's useful. And all of a sudden you've obviated the entire line of the Apple Vision Pro Quest, whatever the hell they were calling it. It's not going to be called anything in 5 years because it'll be gone.
How deep do you go when you do this kind of boots on the ground research? Like, are you buying
is that like a Bee Gees song, or is that
no, I don't know. But like, are you buying all of the goggles and like trying them? Like how far would a retail analyst go in this endeavor? Seriously.
I go to the stores, I draw there's some stuff. I don't need to spend a whole bunch of time in those goggles to realize that they look a lot like the last goggles. And, I'm going to choose just not to operate blind in my universe, augment my experience. But otherwise, there's no substitute for going to a store. I was raised in the stores. It's, if you want to see kind of how a company wants to present itself, and particularly in the consumer space, go there during your highest traffic hours and expect to see a mess, but expect to see the company performing the way it aspires to perform. This is where our spit and polish exam best. And if you don't like what you see, if the business model looks like crap, if they're not able to execute, that's a real problem. That's beyond a red flag. That's just a deal breaker.
So what would you say about like a Dollar General?
I would say they had rats on the food.
Yes,
headline. That's just a brutal. And it's like, you know what? You sell food and you probably shouldn't let wildlife mate on your food, because that as just a story.
Well, maybe if they had more than one employee per store, they'd be able to enforce such a thing, but they can't.
Tons of problems. But again, they're retailers. And so, if people are saving 5 minutes by going to the Dollar General instead of the Walmart or the Target down the street. And man, you can't tell your customers to go to hell that loud for that long and not have it be a problem.
Or your employees. Do you think that Amazon buys a TJ Maxx, a Ross Stores, one of these guys in the future, and tries to replicate that Whole Foods business model? Why are you laughing, Spencer? This is what they do.
No, I don't think they have to. I think that they would much rather just kind of play slumlord to a lot of these different brands, and they're going to extract a little bit of profit throughout that chain.
Yeah,
and
they're going to.
They would love it. They're famously terrible partners for other retailers. Target used to have a deal with them a long time ago, and it was just like, well, they just kind of are stealing our IP and trying to figure out how to make our private label.
Like any great stealing
Jeff,
IP.
It's called business, not friendship. They're nice enough. They're not going to buy them out though. They were just going to kind of steal their ideas, and they're not very good retailers, and they kind of concede that if you listen to them. They're not conflating their market share with their genius. It's just they've got a better mousetrap.
But you've always had to respect like the professionalism in their opinion, right? Because they don't want to be in that business. That's not the business that they're after. They
get 40% margins in AWS, and they get 5% margins as retailers. So it doesn't take them real long. Again, they hire very smart people. So you give them those two doors, and they're going to choose the other one.
This has been so fun, Jeff. Let's wrap this down, Spencer.
Yeah, I have a couple of things. Jeff, you mentioned off the top, you were talking about Amazon buying Whole Foods and the effect they had on the retailers. Let it be known that was a great day to buy Walmart, right? Walmart fell, I think, like 5%. This is like 2017, if memory serves.
2017, I was sitting in a Denny's. I think it was 2017. I was in an all-night diner and watching that, and just watching the absolute torture show, the apocalypse of the retailers.
Hold on.
I just Googled it. Walmart shaves $11 billion off its market cap. $11 billion. What's it worth today?
Probably like 30 or 40, but the thing is, like, it's worth more than what Whole Foods was at the time. Like they went for multiples of what Whole Foods was selling, not just in groceries, but as a market cap, as an entire company. Whole Foods is a great short. Without
Walmart is worth 600 and what?
I have a good one.
Okay.
Does Costco have to worry about Sam's Club right now? Because from what I'm seeing and what I'm hearing, they maybe should, right? So Sam's Club owned by Walmart, right? Costco is the dominant player in the big box, buy everything now sort of space. These Sam Club stores that are like fully digital.
Yeah, they're coming for the memberships, man. They are absolutely, everyone's coming for Costco's memberships. And, because we've kind of solved retail right now. And the solution is you need something other than just the retail to sell people. You need these memberships. So Target Circle, you got the Walmart Plus, they're coming for the memberships. And then as part of that, you're going to do Sam's, which is all part of Walmart. And so, of course, they got to be worried. But Costco has been worried about people forever. And that's why it's been such an amazing company. That's why Costco and Walmart are kicking living crap out of Amazon over the last 12 months. I've won all three of them. And they've just been absolute jackhammer stocks. They've been incredible.
I love it when the price action just completely dispels the narrative, right? You can't own these big box stores with only the physical locations. Bullshit. Walmart and Costco have both been better stocks to own over the past couple of years, more than the past couple of years, probably, than Amazon. Who would have thought?
And both of those stocks, I'm long both of them. And you know what my analysis is? That they're big purple crayon, man. Because ride the trend. They're expensive now, but and they're going to pause, but you got to kind of stick around.
What? Just thoughts on BJ's Wholesale? So I'm from the Northeast. Like BJ's is a thing.
We will talk to Jeff again in a few weeks. We don't need to ask about every retailer under the sun.
Fine. We're going to do a lot more together, Jeff.
I've got thoughts on
to do
BJ's
like
wholesale, but I'm going to tease them for my next appearance.
I love BJ's.
Okay. Noted.
We
controversial
have to,
pro hot take on BJ's.
Jeff, we'll get you on for like a retail wrap up. I want to get your thoughts on Restoration Hardware when that report comes out in a few weeks, because that guy is great. Those calls are crazy. So once again, thank you, Jeff Mackey, for hanging out. I'm going to drop the link in the chat. If you did register to watch this through our site, we're going to send out the charts that we just spent the last hour sharing. If you're watching us on YouTube and you want these charts, click on the link in the chat right there. If you want to get trades like Steve's ridiculous 10x Peloton trade, there is a link also in the chat to join our breakout multiplier. If you're watching us on our site,
it only
down. It's right below.
Just join for bull markets, though. Get your money back.
Okay, just for bull markets. Breakout multiplier is on the page you're watching this video on. Just scroll down and we'll send out a link about that as well. The conference calls for these two companies, Amazon, Apple, starting in 5 minutes. So let's hop off so we can listen. And we'll do this again soon. This was fun. We want to do this more for the big reports. We did this for NVIDIA. We'll do it for NVIDIA again and do it for more companies. So this is fun. Thank you, Jeff. Thank you, everyone watching. And I guess go make some money, all right? I don't know.
Good times. Make money, guys. Have a good day.